All right. Once again, ladies and gentlemen, boys and girls, and children of all ages, this is the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live with some live market update news as we continue to make it happen. So don't forget to hit that like, subscribe, comment, and share button, and share this out if you're on Facebook. All of the great stuff. One second. I'm going to share that out on a couple pages for the people that are catching me on my other pages. One second. Share this out if you're on Facebook. Hey, when it does that. All right, so you can come in. So we got some comments coming in. Howdy, what's going on, Logan? As you come in, tell me where you're from. People that's catching this live. So first, let's start off what's going on in the market right now. Currently, the market is down. The last time I checked was about 500 points. Um, with another slide day, of course, the coronavirus taking its toll. Um, right now, let's take a look. The leading industry that's down right now is real estate. Real estate is getting hit the hardest today. No, 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 no. My bad. I'm sorry. It's actually the energy sector. Energy sector followed by the energy, financial, and real estate are getting hit the hardest today. Hey, what's going on? We got Tamika coming in from Atlanta. How you going on, Miss Tamika? Abraham coming in from Houston, and Logan says, "Hey, we're Nebraska, Omaha, Nebraska." No, I didn't say Omaha. I just meant Nebraska. But I'm in Denver, Colorado. So I will be in Omaha, Nebraska on May 3rd. I'll be doing a book signing at the Bookworm Omaha. I'll be at the Bookworm Omaha if you in Omaha. Beef, what's going on? What's going on, Beef? So I'll be doing a book signing on May 3rd in Omaha, Nebraska at the Bookworm. So if you're in that area, but I'll talk about that later. But so right now today, one of the stocks I want to talk about was good old Microsoft. We've seen Microsoft has been having a hard time lately in the what you call it sector, in the technology sector, and I want to highlight something. Right, I'm looking at the finances of Microsoft. Lester, what's going on? You doing all right? Tell me where you're from, Beef. I know you're from Rhode Island, Providence. I don't know where Lester's from, but yeah, we got Omaha, Houston, Atlanta. Oh yeah, definitely. Logan said he's about an hour away from Omaha. Yeah, I'll be in Omaha, Nebraska on May 3rd. I think it's at like 12 o'clock, something like that. Be there for an hour at the Bookworm Omaha. And of course, I'll be at Berkshire Hathaway meeting. Give me some thumbs up as you come in, hit some heart buttons, some share buttons. So we're gonna jump into the skinny of what's going on right now. Of course, we're looking at the Dow has slipped 500 points. The coronavirus is still got the market scared right now, and I really believe Lester from the Bahamas. The Bahamas is in the house, right? I never been to the Bahamas, but I've been in South Florida, so close enough. So we got the Bahamas in the house, we got Omaha in the house, Houston in the house, Atlanta, uh, Providence. So, Khalid, what's going on? I did join your group, Khalid. I haven't got a chance to do a lot of talking in there yet, but I did join your group. So, but let's get into what's going on today. Let's look at it. Khalid, you from Canada? We got Canada, the Bahamas. We're all over the place. Okay, all right. So let's get into what we're looking at today, right? We're seeing the Dow slide 500 points, and whoop de doo, of course, we've seen bond and gold go up. How can you invest in a gold? You can use the ETF IAU. Oh yeah, thank you, for glad to have you. Definitely. So what you can do is you can use IAU to track gold, and you can use BLV to track bonds, long-term bonds, right? So those two things have been seeing a spike in the market uncertainty. Every time the market goes down, these things go up. Something I've told you guys and girls a long, long, long time ago. Something I put out a long, long time ago. It's a great place to I won't say a great place, but it's a good place to hide cash because BLV pays 3% dividends and it pays monthly dividends. Pays you dividends every month. So I have money sitting inside the BLV. So guess what I'll be doing today? I'll probably be selling some of my BLV and I'll probably be jumping on something like the NASDAQ that's pretty much down today. And one of the stocks I want to talk about is Microsoft, right? That's another one. So for the people that are catching this live, what do you think about Microsoft? Microsoft was a great stock last year. This year, not so well, right? Nobody's really doing well right now, uh, big company wise, especially with the coronavirus. So one of the big things Microsoft got criticized for is uh, they came out and I think they have like two workers that have the coronavirus, and with their two workers having the coronavirus, they've kind of like pushed employees to work from home, and also with that, they're saying that the CEO of Microsoft sold like 47.2 million of his shares. That's bullcrap. I look at that as people like, oh, he sold 47. They'll say he sold 250 million shares, but they won't tell you that he got 900,000 shares in February. Let me show you guys in Europe. Let me share my screen with you right here. Right, 1 second. I'm going to pull this up for y'all. All right. So what I'm showing you guys here, this is Microsoft Insider Trading. Here is the CEO. On Tuesday, the CEO of Microsoft sold 280,000 shares, right? And this was his price range he got or whatnot. So he sold 280,000 shares on Tuesday. Everybody's like, ooh, that's a bad sign for the company. But guess what? How many shares do he hold? 1.3 million shares, right? So the market value of 47 million. So he sold 280,000 shares. That's not that much. But also you got to look back on February 6th. Look at this date, February 6th. He had an award options of how many shares? So he got an award option of 900,000 shares just last month, right? And he sold 280,000 shares. So that doesn't strike me as bailout because the CEO sold shares. Usually, I look at that. I look at what the insiders are doing because it could be a good indication of what's going on in the future. But I'm looking at right now the CEO selling $47.2 million worth of shares or whatnot on Tuesday. It's not that big thing when you look at how many he sold. 21% of the shares he hold, if I'm reading this correctly, and he was just awarded 900,000 shares the month before. Not something that I'm going to stream about. Make sense? So but what I'm looking at that is I'm kind of looking at people are being a little bit overreactive, right? People becoming a little bit overreactive, and it's pushed down the price of Microsoft down to $159, which I don't like it because it's in my portfolio. But I'm thinking of bringing in a great buy opportunity for people because I haven't. We know the coronavirus will affect everybody, right? The global supply chain. We know it's going to affect earnings, second quarter earnings. We all know that. Logan said, "What site are you on, and what are good sites for free information?" Logan, that was ETrade that I was on just now, right? The site that I like the most with charts and stuff, not the most, but one good one is Yahoo Finance. Yahoo Finance is free. You can go on to Yahoo Finance, use their charts, use their indicators, stuff like that. If you have TD Ameritrade, you can use TD Ameritrade. If you have ETrade, you can not ETrade, but ETrade and TD Ameritrade. They have great charts, great resources inside of them. If you have them, but you have to have an account, right? But the free one that I like was Yahoo Finance. That's a great one. So my thing is, we know as the market uncertainty will come, as the market starts to slide and tank and slide and tank. Right now, don't be surprised. Monday morning, the Dow runs 1,000 points. Don't be surprised by that at all, right? 1,000 points the Dow runs in the what you call it? 1,000 points the Dow runs on Monday morning. So what am I going to do today? Today, when I get off of this live stream, I'm going to position myself for the bull because the bull will win in the long run. And what am I here for? The long run. And then I look at companies like a Microsoft or Apple. I kind of do a little, hey, why is this stock dropping? Why is this falling off? And people are saying, hey, coronavirus, it's going to hurt the supply chain. It's going to hurt the future earnings of the company. That's to be expected, right? I think that is bringing in a discount. I think that is bringing in a nice little discount, a company I still believe in strongly, right? I haven't seen anything massive happen to the company. I think this is fear. I think it will have effect on the company, but it's a $1 trillion company. They will get over it. Haven't you seen anything massive come to the company that may be like, ooh, besides the price dropping? Looking at the price alone is not investing, which is known by the greatest investor of all time, Warren Buffett, has taught us that. So you just don't look at the price. I see the price dropping. I wonder why. So I take a quick look, and people say, oh, the CEO sold stocks. And you can see right there when I look inside of that, you'll see the CEO sold 21% of his position. He sold 280,000 shares, but he just got awarded 900,000 shares the day before. So some people don't even read the article; they just read the headline and be like, "Ooh, CEO selling Microsoft. It must be something wrong with the company." So when people do that and they start to sell knee jerk, that's a great time to go in and buy, right? So Microsoft is one of the MAGA, not Make America Great Again, is part of the $1 trillion club of Microsoft, Amazon, Google, and Apple, right? So when you see these type of things, these things bring about great opportunities for you to be able to purchase particular companies, right? So now we look back and we see the companies that are kind of growing, right? So we look at the sectors that got hit the hardest: technology, energy. I don't know people out there who's the energy buffs. I'm not a very big energy buff. That's out of my circle of competency. Max B, what's going on, Max? What's Max? What's going on? We got Max B in the house. I don't know why my microphone here stance is kind of tripping a little bit. But yes, so that's my thought process. We know the bull will win in the long run. We see the $500 drop today. Don't be surprised Monday morning, and don't look crazy Monday morning when you start to see uh, the company start to go up. Not the company, but the whole uh, economy start to go up on Monday morning. We've seen this happen a few times, right? So that's the big thing. We've seen gold run. We've seen bull. We've seen gold run with the AIU, GLD. These are stock symbols that I'm calling out, by the way. Uh, GLD and AIU. These things take runs, but this is classic of what happens when you see a bull market. So when you see not a bear market, when the bear market comes, you're going to see bond and golds as people run to them. Also, you're seeing um, like Robinhood came out the other day, and of course, I don't like Robinhood. I made a video call why I don't use Robinhood, and y'all seen a lot of issues go down with Robinhood, especially 2 or 3 days it had with just being completely off of the market. I won't say that's no hit to them and their company. It's more a hit to, um, just technology. Maybe growing pains the company may be going through. How you doing, Miss Beverly? St. Louis in the house. So we got St. Louis, Providence, Rhode Island, Canada, the Bahamas. Who else we got? Omaha. Well, not Omaha, but Nebraska, Houston, Atlanta. A lot of good places representing in today all over the globe. And I'm here in Denver, Colorado. So when we're paying attention to this, and I'm giving you guys updated market news, right? Ronnie said, yes, I like let me try something here for a second. Oh, I don't you know what? Oh, okay. I do like that. That's what Miss Beverly posted there. But okay, so if you ask a question, you know what? That's what I do. If someone comes in and asks a question, I'll highlight it here so everybody can see it. So let's say Logan asked a question. He said, what site are you on and what is a good site for free information? Earlier, this is what he was talking about. I'm going to share my screen real quick. Share my screen. Kind of tongue twisted there. And this is Yahoo, right? And what I was doing, I was breaking down. Everybody came out and said, ooh, the media hyped in on this and said, hey, look, this is the CEO of Microsoft sold $280,000 worth of shares that was worth $47 billion. And when everybody saw that, they was like, "Oh, why is the CEO selling?" I said the same thing. And but when you look at it, you go a month back on February 6th, he was awarded, the same person was awarded $900,000 worth of shares. So he was awarded $900,000 worth of shares a month before. And I don't know what the exercise price on him was, but he sold a little bit here. You know, he sold 21% of his stocks, meaning that he still has about 80% of his shares still holding. And that's what he was asking about. All right. So that was the question he asked. So when he saw me use that, I was using ETrade. I was looking at insider activity, and I also was looking at ETrade insider activity. But one of the sites I recommended, I liked, that's you have to have an account to use ETrade charts. You have to have an account to use TD Ameritrade. But if you just want something that's good that you can use, the most noticeable one out there is Yahoo Finance. Yahoo Finance, right? Go to Yahoo Finance, go to charts. You can pay for some better service, but you don't have to pay for that, right? So now we're looking at the sectors that got hit the hardest. Let's take a quick update. I wish I can feed this into the stream, but I have it here on my other phone, and so many people are having, the coronavirus is calling closes on places, things like that. So here we go. We got the energy sectors down 5%. They're leading the pack, and followed closely behind them is the financial sector, meaning our banks, things like that or whatnot. And then closely behind them is real estate. So everything is red, everything is down. Consumer, and the one that hasn't been hit the most, you guys and girls should know this. What sector do you think is probably not getting hit the worst? And why? It's a bonus question. Who can answer that question? What sector of the 11 sectors, what sector do you think has not been hit the most and why? People who really tune in and listen, you should know this. It's like a little quiz, a little fun quiz. See if somebody can kind of guess it. And to kind of help you out a little bit, I'm gonna give you the sectors. So you have consumer staples, energy, technology, financial, utilities, consumer discretionaries, uh, industrial, health, real estate, and materials. Out of those 11 sectors, who do you think has gotten hit the least and why? And the reason why I'm asking this question, this is for people add this into their portfolio. I don't know, somebody, Logan, you said pharmaceuticals. Tamika said health. Tamika, that is not correct. I'll tell you. Somebody said health. Tamika said healthcare. Abraham said healthcare. Abraham said pharmaceuticals. No, that is not correct. We'll go over the options again. Consumer staples, energy, technology, financials, utilities, consumer discretionary, industrial, health, real estate, and materials. And it's something I always told people, like, hey, you want to get this particular sector because people add this sector in there to limit their right? I'm gonna go ahead and take down this question. People intentionally add these um, to their portfolio because they are trying to limit themselves, to eliminate risk. So I'm gonna give it about a couple more seconds, and we're gonna get into why. Abraham, you got it right. Abraham got it right. He said consumer staples. That is correct. Abraham, why is that correct? And what I'm going to do for Abraham, I'm going to send you directly, I'm going to send you a hardcover copy of my first book. Send me an email, Abraham, with your name and address if you already don't have the book. If you already got the book, then give it to your children, kids, nieces, nephews. F-I-N-A. F-I-N-A. I'm typing in my email address. Prince at childrenfinancialliteracy.org. So, Abraham, You got it correct. He said consumer staples. So please send me a email to consumer state. Send me your name and your mailing address, and I'm gonna send you a hardcover copy straight to your doorstep of my first book, my classic book, children's book, Wesley Learns to Invest for Children. Right? If you already got the book, if you already have children, find another kid, give it to them, something like that. Right? But now let's go back into it. Consumer staples. I'm going to put up Abraham. He got it right. Why consumer staples is correct? Consumer staples are things that people will buy regardless of what's going on in the economy. Meaning that Clorox bleach, people will wash their clothes. I hope people will brush their teeth. People will smoke cigarettes, right? People will smoke cigarettes. People will I'm not saying like it's a good thing, but people will brush their teeth. People will use Clorox. Things that people will use regardless of what's going on in the company. Coca-Cola. Coca-Cola is a consumer staple, right? Uh, I don't have the whole index in front of me, but you have staple company. Walmart. Walmart is considered a consumer staple, regardless of what's going on in the economy. People will shop and go to Walmart. People will drink Coca-Cola. We drink so many Coca-Cola products that I don't even think we know how much we drink. So many fountain drinks pretty much everywhere. People will drink Coca-Cola. People will use Clorox bleach. People will use Colgate and brush their teeth. Those are consumer staples, and that is the sector that has the biggest resistance against a recession, right? And then Max B, I'm gonna put his answer up here. This is what Max B said. He said because those stocks are safe during downturns. That was the answer. It was consumer staples because those stocks are considered to be safer during downturns because regardless of what's going on in the economy, people will use it regardless, right? So of course, when you're seeing everything red, the companies, even though consumer staples don't go up, they're the ones that's going to be a little bit more recession proof, compared to your healthcare and things like that. Healthcare is a weird one because even though we know people will use healthcare, it's not what you call it, right? Key said backdrop looks good. Thank you, thank you. I changed the backdrop up. I try to make the backdrop look like what I try to make it. I try to make it look like whatever topic I'm talking about. So since the market was down today, I thought I'll use a little crash. If it was up tomorrow, I'll use a little up. I'm going to talk about Microsoft. I was thinking about putting Microsoft in there, but I didn't want nobody to Microsoft to be reaching out to me. Hey, why did you say this? Whatever. I don't think they will, but you just never know. Right? All right, so we got a question here. Mr. Lawman said, "What do you think about Goodyear stock?" Um, Off the top of my head, I'm not familiar with Goodyear stock, meaning that it's a stock that hasn't really crossed my mind. I will look into it. GT, right? But I really don't know that much about it. I haven't heard too much about it. Hadn't been a big news flash. But so that's why, and somebody in here maybe have heard about it. I mean, of course, I've heard about it, know about it, but I haven't looked at the finances. I haven't watched the company. Off the top of my head, I don't even know what it cost off the top of my head. So I can't speak of a Goodyear stock, right? So sorry I'm not too helpful on that one, Mr. Lawman. Thanks for the question though. But that's another thing. So when we look at the industries altogether, we're looking at the ones that take the biggest hit during the downturn, right? 1 second. All right, Mr. Lawman, ask the question. How about the HAL stock? Let's see which one is that one. We got a little time today. But I want to leave you guys and girls with this while I'm looking at this particular stock. No. First thing I look at the company, HL, it don't even pass my first test. It's not even profitable, right? So if you're not profitable, you better have a strong brand. You better be number one in your industry. So when I look at the company, it's not even profitable. So let's take a quick look at GT. GT, I didn't even know this. Goodyear is not profitable. Mr. Lawman, quit looking at these cheap companies, man. Not saying it's a bad thing, but it's an unprofitable company. It's $8 right now. Pays a heck of a dividend. That's crazy. Why are you paying 7% in dividends in a dividend yield? Well, your dividend yield is 7%, but but you're not profitable. So that's my thing on that one. So that one even passed my test. All right, now we're getting a couple good questions in here now. Next question up. What do you think about apps? I'm thinking that's a stock symbol, or you're not talking about apps, right? Let's take a look. Digital Turbine, not profitable, doesn't pay a dividend, not interested. It would be all right. These are some dumb decisions I made in the investing world, right? Okay, you're welcome, Mr. Lawman. If you got a friend that has a hair business that's making money that you can invest in for $20,000, then you have a friend that has another hair business that's not making money that you can invest in for $20,000. Who are you more likely to give your money to? The new startup that's trying to figure it out, or the person that's already kind of figured it out and they just need a boost? That's how I look at a company that's unprofitable. When I'm comparing you to all these other people that are profitable, it's only a few companies like Uber. I give a shot. It's unprofitable, but it's a big name. It's the number one in this industry, right? It got some strong backing. I can give you a shot for being unprofitable. But when you're these smaller companies, I can't do it. Okay. We got Miss Tamika. What are your suggestions on maximizing your TSP during this time? Maximizing your TSP during this time. One, I would say, if you still have money to contribute to your TSP, TSP out there for everybody, that's the thrift savings plan. That's the 401k for federal employees. For all your military services and all your DoD personnel, they use the thrift savings plan. It's actually the largest 401k in the world, ran by a company called BlackRock, right? So when I look at what are your suggestions on this, right? So in a down economy, first it starts with a 1 second. First, it starts with preparing before the market. So what I always told people who had the TSP, I said, put some money into the F fund. And everybody's like, why put money into the F fund? The F fund is bonds. Everybody's like, man, why are you talking about putting money into the F fund? I said, that's where you want to keep your cash at. So when a downturn comes, you're going to do what's called a interfunds transfer, because right now bonds are going up. F fund is going up, C fund is going down, S fund is going down, right? Because the C fund is common stocks, the S fund is small cap stocks. So those things are going down, and what you call it stocks are going up. I mean, the F bond is going up. G fund is staying the same. That's the savings account. So if you already had money into the F fund, I would say, boom, take your money out, put some money into C and F, right? Some people say, oh, it's a downturn in the economy, move your money. And that's you acting like you can time the market to get out at a bad time and jump back in at a good time. You see how the market been running these last couple of days, up 1,000 points, down 1,000 points, up 1,000. I'm not going to go crazy with that. If you can pick the bottom of the stock market, you are a genius and you will be making trillions of dollars throughout your life. So that means that 99.9% of the people uh, can't pick the bottom of the market, and that's fine. If you can't pick the bottom of the market, the only way to beat the market is to consistently invest in the market and to really invest into the dips. So to maximize, first, now going into the future, Miss Tamika, put money into your bonds in the F fund, allocate some money to the F bonds so that when times like this come, when you see bad cycles come, you can put money into the CNS, right? Now, if you still got fresh money coming in, if you still can put money into the economy, you got fresh money coming in, you want to put your money into the CNS, right? I'm not a big fan of if it's long term. If you're long term, I wouldn't be trying to put money in and out, things like that, right? So I would, in this particular time, to take advantage, what I'm doing is I'm doing an interfunds transfer, selling out of my F, jumping into the CNS, right? And then I'm not, jumping in and out of the market trying to catch it the good times. I wouldn't do that. So in the meanwhile, I wouldn't do L funds. If you're long term, if you're 5, 10 years down the line, I'll keep it in the C and the S, and I would just go with it like that. And it's, as I had new money come in, I would continue to put it into the common stocks, which is the S&P 500, and I put it into the small cap, which are the two best performing things inside of the TSP. And they will beat the C fund, will beat all those L funds over time. We know that, and that's probably the best thing I can do. But going into the future, as your cash is coming in, keep some money into the F fund to be able to take advantage of the downturns. All right. Okay. She said, okay, that's where my money is. Thank you. Okay. All right, guys and girls. That's going to be it for today's live market update. Oh, also, check out my video I just did. I taught you how to buy money. Not how to buy money, how to buy stocks for how to buy fractional shares with the Cash App. On the Cash App, you can buy stocks via your Cash App. This is not sponsoring anything. I know a lot of people out there use the Cash App, but I just did a tutorial showing you how to buy stocks, how you can buy instead of getting those little penny stocks. You guys who just asked me about stocks, they was all unprofitable and they was all under $10. Those are the classic mistakes that new people make. I did it myself. I jumped in all the penny stocks, all the little cheap stuff, and 9 times out of 10 that's not going to work for you, right? So what you can do is you can get a piece of Apple now for $1. You can get a piece of Google for $1 or $10, right? You can get a fraction of a share via the Cash App. Robinhood is talking about doing it. ETrade is talking about doing it. All the big companies are talking about doing it, but they haven't done it. So for $1 today, you with no fees, you can go get an Amazon share for $1. You can go get a Apple share for $1. All of the good stuff. Tamika said, "Yes, I'm looking long term. I was thinking about. Uh, I was talking about the money out of. I was taking my money out of the G fund and splitting between F and C. Yes, definitely get out of that G fund. And the reason why I don't say the G fund is a savings account. G fund. What did the federal government just do? Just do with the interest rates? He just dropped them. So what you think is going to happen on that G fund? The interest on the G fund is going to drop. Yes, the problem with the G fund is that the inflation risk, right? So I'd rather put it into a bond that's going to get me the F fund, which is a bond that's going to get me a little bit better interest as I wait on the downturn of the economy. So that's my thought process. That's my way of looking at it. Thank you guys and girls for asking questions on the live feed. I kind of appreciated that. And also check out the podcast across the globe, right? The podcast, we're on we're on something everywhere, right? Anywhere you can catch a podcast, iTunes, Google Play, Amazon Music, Pandora. We're on iHeartRadio. Stop by, grab that podcast, get the audio experience. And for the people that can catch it live or catch a playback, I've gotten great feedback with doing this. That's why I stepped it up a little bit, got me a little background, got me a microphone, got some lights, some stuff like that to bring you guys and girls better content. Okay, one last thing. Happy days. Just remember, you cannot eat gold or stocks. The future will be clean, organic food. Crop failures due to climate change will drive up prices. The man with the food will win. Well, that's true. Yes, that's consumer. I would consider that to be more consumer staples, right? I think that you're right. You can't eat gold or stocks, but I think the most powerful thing if the economy goes down, the most powerful thing is going to be guns. A gun. Because guess what? You can have all the food you want. And we've seen history has taught us you can have all the food you want, but if I got a gun and you don't, you know how this change is going to happen. You can have all the gold you want, but if I got a gun, you don't. Guess what's going to happen, right? You know how that exchange is going to go down. So when people say, hey, the world coming to an end, what's going to be the most powerful commodity? Bullets, guns. That's it. Bullets and guns will be the most powerful thing because who has the biggest gun makes the rules. You can look at third world countries. Look at like a country like a Somalia, or countries down in South America. You can see those countries. What happens? The person who got the biggest guns makes the rules. You got food, I want it. Either you're going to give it to me or you're going to die. You got gold, I want it. Either you're going to give it to me or you're going to die. I'm sorry, that's just how it works. Not saying it's fair, but life ain't fair. But anyway, that's my thought process. I got to get out of here. Thank you guys for asking the questions. Beef, what's going on? He said Beef said weed, marijuana companies. We's gonna make it. We's here. It's a marijuana industry. The marijuana industry will do well. I'm just waiting on who the big boys are going to be. It's too many players, and 90% of these people are going to be gone. They're going to wash out as time go on, right? So I'm waiting on to see. Because think about it real quick. If I said, who are the top? Name the top shoe companies. Everybody would probably say, oh, Nike, Adidas, or whatever. I would say, name the top. Let's say another industry, fast food. Everybody, oh, McDonald's and Wendy's and Burger King, right? I say name the top marijuana companies. Everybody stretching. Nobody knows, right? Or if I said name the top beverage companies, oh, Coca-Cola, Pepsi, right? So when the marijuana industry, the cream will rise to the top in every industry. I don't know who that guy or girl or group is going to be, but they will come, and I will keep an eye out for them. Right now, it's just too what you call it. Ronnie says, thank God it's Friday. No problem. Happy Day said, food and medicine. That's all that people will want and need. That's true. And if you eat properly, your food will medicate you. I'm not the one to talk, but if you eat properly like you're supposed to, your food will medicate you. You're right. But anyway, I got to get out of here. I want to say thank you guys and girls for doing that. Check us out around the globe. Appreciate the support. And until the next video, podcast, cartoon, book, or whatever else crazy you see me do around the globe, peace, be safe. I'm out, and thank you.